EPK Capital presents Deep Dive on PIDILITE Industries. Hey everyone, welcome to EPK Capital. I am your host, Rutvik. Today, we're diving deep into one of India's most beloved consumer brands, PIDILITE Industries. You know them for Fevicol, the adhesive that's practically become synonymous with glue in every Indian household. But here's what might surprise you. This Rs 158 lakh crore company has delivered an astounding 661% returns over the past decade, turning every Rs 1 lakh investment into Rs 7.6 lakhs. But with the stock trading at Rs 118 today and a PE ratio of 73x, the big question is PIDILITE still a smart investment, or have we missed the boat? Stick around as we break down everything from their promoter story to Benjamin Graham's value investing principles to find out. The company and its promoters. Let's start with the foundation. PIDILITE Industries was founded back in 1959 by Balvantray Kalyanji Parekh, and today it's still very much a family-run empire. The company is led by the Parekh family, with promoters holding a commanding 69.6% stake in the business. Madhukar Balvantray Parekh serves as executive chairman, while Sudhanshu Vats is the managing director. What I love about this promoter structure is the skin in the game. When promoters own nearly 70% of their company, their interests are completely aligned with minority shareholders. The company isn't just about Fevicol anymore. They've built a diversified portfolio including Dr. Fixit, waterproofing solutions, M-Seal, sealants, Fevicryl, art materials, and construction chemicals and specialty industrial products. Today, PIDILITE operates 68 manufacturing plants across India and has expanded internationally into Asia, Africa, and Latin America. They've made strategic acquisitions worth over Rs 2,600 crores in the past decade, including the Rs 2,100 crore acquisition of Huntsman Corporation's Indian subsidiary in 2020. 10-year financial analysis. Now let's talk numbers, and trust me, these are impressive. From FY 2017 to FY 2025, revenue grew from Rs 5,734 crores to Rs 13,388 crores, delivering a 10-year KGR of 11.18%. That's consistent double-digit growth for a decade. But here's what's even better. Profit growth has outpaced revenue growth. Net profit jumped from Rs 860 crores in FY 17 to Rs 2,076 crores in FY 25, with EPS growing at a KGR of 12.45%. The current EPS stands at Rs 42.89. Margin excellence is evident across the board. The company maintains EBITDA margins consistently above 20%, with recent quarters showing 24.1% EBITDA margins. Net profit margins hover around 15.5%, while return on equity is an exceptional 27%. Here's where PIDILITE truly shines. They're virtually debt-free with a debt-to-equity ratio of just 0.02. This gives them tremendous financial flexibility and low risk. The current ratio of 2.27 indicates healthy working capital management. Stock chart, technical analysis. Let me paint the long-term technical picture for you. Over the past 10+ years, PIDILITE's stock has been nothing short of spectacular. From Rs 409 in September 2014 to Rs 3,118 today, that's total returns of 661.88% and annualized returns of 20.27%. Current technical levels show the stock trading with a 52-week high of Rs 415 and 52-week low of Rs 2,622. The RSI stands at 54.62, indicating neutral territory, neither overbought nor oversold. Key support levels are around Rs 2,932, Rs 2,999, and Rs 3,056, while resistance levels sit at Rs 3,240, Rs 3,278, and Rs 3,415. The stock has been trading above its long-term moving averages for most of the decade, indicating a strong uptrend, though recent patterns show some consolidation after the massive run-up. Benjamin Graham valuation. Now comes the crucial question. Is PIDILITE fairly valued according to value investing principles? Using Benjamin Graham's famous formula, V EPS X 8.5 plus 2G X 4.4 Y. With current EPS of Rs 42.89 and expected growth rates, our calculations show conservative scenario, 12% growth, fair value of Rs 8.18 versus current price of Rs 3.118, overvalued by 281% optimistic scenario, 15% growth, fair value of Rs 9.69 versus current price of Rs 3.118, overvalued by 222%. The Graham number suggests a fair value of Rs 4.32, indicating the stock is overvalued by 622%. According to strict value investing principles, PIDILITE appears significantly overvalued at current levels, trading at a PE ratio of 73x compared to the 10-year average of 70x. Pros versus cons, the complete picture. The bull case includes their 60% market share in adhesives, making Fevicol literally synonymous with adhesives in India. Demographic tailwinds from a growing middle class, urbanization trends, and rising disposable income support future growth. The company boasts a debt-free balance sheet with 27% ROE and consistent dividend payments of Rs 20 per share for FY25. They're investing Rs 180 crores annually in R&D while expanding internationally with 15% of revenue from global operations. ESG leadership is evident with an 80% renewable energy target by 2030 and strong sustainability initiatives. The bear case centers on valuation concerns, a PE of 73x and price-to-book ratio of 16x showing premium pricing. Benjamin Graham metrics suggest significant overvaluation. Growth maturation in the core adhesives market and intensifying competition in construction chemicals pose challenges. Economic slowdown risks and raw material inflation could impact margins. Important checks. Regarding controversies and scandals, PIDILITE has been relatively clean compared to many Indian corporations. There was a minor internal fraud incident in 2017 involving employee misappropriation, but the impact was minimal and showed strong internal audit processes. Recent SEBI consultation controversy in 2024 involved allegations about Davalbuch providing consulting services, but the company clarified these were for supply chain expertise with no SEBI cases against PIDILITE. Globally, PIDILITE is the leading adhesives manufacturer in India with expanding presence in 60-plus countries and strong positions in emerging markets like Africa and Latin America. Conclusion. PIDILITE Industries is undoubtedly a high-quality company with exceptional fundamentals, dominant market position, consistent financial performance, debt-free balance sheet, and strong brand portfolio with pricing power. However, valuation matters in investing. At current levels, traditional value metrics suggest significant overvaluation, and a PE of 73x requires perfection in execution. For long-term investors who believe in India's consumption growth story and PIDILITE's execution capabilities, it could still be part of your portfolio, but perhaps not as a large allocation. For value investors following Benjamin Graham's principles, the current price offers limited upside and significant downside risk. The sweet spot for entry would be closer to the Rs 2,200-2,400 range, which would provide better risk-reward dynamics. Remember, great companies aren't always great investments at any price. Timing and valuation matter. Important disclaimer: this analysis is for educational purposes only and should not be considered as financial advice. Stock investments carry inherent risks, and past performance does not guarantee future results. Always consult with a qualified financial advisor before making investment decisions, and do your own research considering your financial goals and risk tolerance. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel, and let us know in the comments which company you'd like us to analyze next.